Hey, what's up, everybody? I think I got my video maker sorted. I was having issues with the uh, video creating app I had downloaded. It was working well, where it would let me download things let me record a video for longer than 10 minutes, but then all of a sudden it's like your trial's up. Now you can only record 10-minute videos, or you have to buy the app. And I was like, no way am I buying that app. And I don't like that app. It's not that great. So I was like, if I'm gonna have to buy an app, I'm gonna look for a better one. But I found this free one, so I'm gonna try to use it. And let me know if you guys have any issues with it. I'm gonna try to load up to YouTube after this. But in the meantime, I'm going to attempt to make a video showing you patterns and how they work. I tried to do this a few days ago while we were still in the pattern, but I left a few indicators up too. I don't really need this on there, so I'm going to take this off. Okay, so now we just have the candles, right? That's all we really need. And I'm going to switch back to the cursor because I need to move up a little bit. I'm going to start the line down here for the support of the trend that I'm discussing today. And the reason why I bring it up is because the trend line is actually a part of the triangle in question. And that usually happens often, guys. This is actually what people consider a continuation pattern, even though it didn't break out as we it expected it would for a continuation pattern, because a continuation pattern would mean we continue going up, but we didn't do that, right? So it didn't work out. That's how trading is, guys. These patterns are 50-50 a lot. This one right here, to me, was 50-50. It was a big triangle. I know a lot of people were telling me, no, it's a pennant. You know what? If it was a pennant, it was a continuation pattern and we would have broke up from it. So the market disagrees. Perhaps it is a pennant. It very well looks like a pennant whenever you shrink the chart up. This gets a little bit straighter up and down and shows you that that's a pole and that's a pennant. Usually a pennant like that breaks up, though, which leads me to believe that the market was kind of mixed on their feelings about this being a continuation pattern. And that's the way you can gauge things. It's really hard to do it before the fact, but after the fact, you could tell how the market felt about this, and they felt bearish about it after hitting 42 and then making a lower high and a lower high. The writing was on the wall, and that's what these patterns do. And they show a period of consolidation. If we would have broken up, I'm going to show you guys how to play that too. But there's different patterns. Not every pattern is created equally. This pattern is more of a 50-50. It'll break up 50% of the time. It'll break down 50% of the time. We had multiple reasons why we didn't break up, and I'm going to go over them throughout this analysis. But the first things first, hold on one second. I'm sorry, I wrote up criteria of way I want to follow in this video, and I had to reach over there and grab it. But okay, so you need to identify a pattern as early as possible. Excuse me, I'm sorry. But earlier you identify this, the more you can trade off of it. Not every pattern is the same. I mean, there's one instance where we bounced down here and bounced up here and hit this, but none of the other hits were really could say, hey, we crashed into that. You know what I mean? So your buys and sells may not trigger if you have them set thinking, oh, we're going to hit the resistance right here and bounce down. So it's hit or miss with some of these trades, guys. You're going to have to be fluid with the market. If you're going to trade a pattern like this, I suggest you make time, and you're going to have some effort involved, because not only do you have to worry about catching the bounce off of the support and resistance, because if you do, you could buy the bottom, sell the top, buy the bottom, sell the top. You know what I mean? That's what it is. That's what trading's all about, is identifying stuff like this and making money off of it, because it's very rare where you have an edge in a market. And for this brief few days, we did have the edge because we could see what Bitcoin was going to possibly do next. And just because you have the support and resistance of a trend available doesn't mean you're going to have a key to the future. It just gives you a little edge on the market. It shows you the possibilities. I mean, we don't know where it was going to bounce the whole way up here, but every time it got there, it was evident that that was support. And even down here, even you could consider that a bounce. That's definitely a bounce. But like I said, these trends tend to break out towards the end of the life. So anywhere between here and here, I was expecting a breakout. I told everybody it was going to happen late this January. That was late enough with the breakout right here. And you can see after we fell out, look at that big red candle. And look, we dipped all the way down to here, 28,800. That shows you that these trends have a lot of power. And this is a 4 hour time frame, so it's not really, I mean, it's on the daily too. So uh, but this dip to 28K, you could tell the bulls weren't down with that. We since recovered to above the 200 MA, which was promising. I was hoping the 200 MA would catch us, and it looks like it did. We're flirting with it right now. I mean, right now we're above it, but we just made it above it. So it's one of those things where the only reason why we didn't dump any further was because of this strong support. And right here, is the daily 50 MA. Here, I'll draw it on there. I mean, it's going to be a rough, but you have to look for all that stuff. That's why I like to have these other indicators on the chart, because the daily 50 MA ended up being right here, which is what stopped us from. You can see that wick bounced right off of it. So that's what's important. Cycle through the time frames. This pattern is the same on the daily as it is on the 4 hour. It's just a few less candles because it takes 6 of these 4 hour candles to equal a 24-hour candle. So you have to understand the difference between a daily and a 4 hour chart, even though the mechanics are the same as far as this triangle, because the triangle looks the same on this chart as it does on the daily. It's just a little smaller. Here, I'll show you. Cycling time frames is important, guys. But identifying the pattern that we're in is also important, so you can learn to trade it with some reliability. You know what I mean? And there's your pattern right there. It's just a few less candles. You know what I mean? And you could even go to the weekly, and it might be 1 or 2 candles, but there's still a pattern there. That consolidation is evident, and you can see. Look, there's our 50 MA. We almost got all the way to it. It shows you that the bears respect these MAs, okay? Because we got near it, and then look at all the buys that happened. That means people are setting their buys around this 50 MA. There's no doubt about it. That's why we see this deep wick. I mean, this wick isn't as shallow as you think it is. It goes from 30,800 down to 28,800, which means that's a $2,000 wick. That is a lot of pump. You know what I mean? Let's say you buy down here at the bottom, and you could make a house payment, or you could buy a house if you have enough money in the market just off of this one pump alone. So it shows you that these patterns don't always end the way we want. Everybody wants them to break up. Everybody loves the bull market, right? But when they break down, you need to be able to take advantage of that. And I'm going to go into detail about how to do that in this video as well. So I'm just trying to show you guys that the pattern looks similar on the 4 hour as it does on the daily. I'm going back to the 4 hour. I just appreciate the 4 hour because there's more candles to look at, and you could see and I prefer the 4 hour personally, even though the daily is more significant. But I'm gonna try to stick to the video here and stick with my bullet points. Okay, so the earlier you identify, obviously, the better, because then you could trade the bounces. Okay, and then if you can, I keep if you would have knew all of this support was here, you could have made some decent trades off of this, because the 4 hour 50 MA did work as support briefly, and then we lost it and went to the daily 50 MA. I mean, the 4 hour 200 MA. That's my blue line right there, guys. Every time you see a blue line, it's the 200 MA. Now, the MAs are different depending on which time frame you're on, so I'll try to make a video explaining all of that in detail, but we're going to stick with trends today. Now, this trend right here, it broke down. We found support. Now we're consolidating right along that's 200 MA, and that is common to flirt with it. The bulls and bears are basically in a death grip. It's the weekend. There's diminished volume right now, so I wouldn't expect a lot right now. But I can tell you that the 22nd was yesterday, so today's the 23rd. There might be a gap and it looks like it might be above us for now. Let's hope so. You know what I mean? That gap might show up here. I mean, it may not be big enough or significant to even look at, but if we dip back down to this 50 MA and retest it before the end of the weekend, I can almost guarantee there's going to be a decent sized gap to trade on Monday there. Now, I can't guarantee those gaps are going to fill, but that's the beauty of trading a pattern, is to continue to trade it afterwards. You can learn also that this, I'm gonna draw it out a little further. I'm sorry, my mouse is a little squirrely. All right, so that's good enough, right? All right, so let's just say we're trailing along here and we start going up. This resistance doesn't disappear because the pennant is over. It's still going, guys. And I have a feeling that we may end up bouncing into it further in the future. So I'm leaving it on my chart for now. I told people this morning that it was significant and that you needed to pay attention to this, because if we mosey along, we've already retested this basically. I mean, it was close. In fact, if I do it to the wick like it's supposed to be, it did test it. You see how I'm on that wick now, and it did retest the bottom support of this trend line. I mean, as far down as it could go. So that's how these patterns are helpful, guys. Even if we break above the resistance I just mentioned right here, so let's say we're trailing along and we do break above it. We still have to worry about this being resistance, because all former resistance becomes support and vice versa, guys. So on the way down from the all-time high, you hit every support on the way down, because that's the one thing that kept the market very confident, was we had all the support. But look inside of here, just because you're inside the pattern doesn't mean the only thing you're going to bounce off of is the top and bottom. Look, we had a instance where we bounced off of it here, but when we came in here, the cloud held us from actually reaching the bottom. That's something you're going to have to take into effect. Even the 50 EMA stopped us from getting to the top again here, and then we were flirting with it the whole way, so we never actually peaked or bottomed out on the in the trend since here, or here, I'm sorry. But it's one of those things where you're going to have to use indicators like this to kind of judge the market. You know what I mean? When there's doubled support and resistance like there is right here, we attempted to break back up through it. And if we would have, we may have broken up through the top of this. But double support, I mean, double resistance right here. The 50 MA along with the cloud, it just, the bulls looked at that and said, hey, it's a little bit too much for us right now, and there was not enough volume to push us up through there. And the Bears looked at that as an opportunity, and that's why we dumped out of here. It was almost like, okay, this is our last shot to break up through this. Now these patterns are hit or miss, guys. So what do you do when you get towards the end of this? Okay, I'm gonna try to go into how you exactly trade the end, not inside of here. We all know you go into tether here, buy here in a perfect world, guys. Okay, so let's say we're getting towards the end. I know this red candle's coming because I'm clairvoyant. So I go into Tether right here, buy back into Bitcoin here, go into Tether here. In a perfect world, guys, you know all those pivots, okay? Go buy back Bitcoin at the bottom, go into Tether here, buy Bitcoin, go into Tether, buy Bitcoin. And when I say Tether, I don't mean Tether, I mean a stable coin. Go into any stable coin you feel like, you know. But that's how you trade the inside of a pattern. Now, when you get to the end, it's a little different. You need to make sure you have your stop loss set right. And I'm going to explain how you do that. So let's say we make it here, and we're right in the middle and nobody knows which way we're going. You know what I mean? They're like, we don't know which way we're going to break out. Let's say this never happened. So, you don't really know either. You know what I mean? You're like, hey, I don't know if we're going to go up or down. This is a 50-50. So what do? You want to set your stop loss, but you don't want to set it inside the triangle, because we have every opportunity to bounce off of this and then break out. You know what I mean? I've seen it happen before. It's not common, but it does happen, guys. And it's almost like they're hunting your stop loss. But your stop loss needs to be low enough out here where it doesn't get wicked out. You know what I mean? So you want to set it. But let's say we get up here. I'm like, hey, I'm comfortable with setting my stop loss right about here, because I could take the loss, and I think we won't bounce until this 200 MA, which would have been another $1,000 drop. So that saves me from losing a little bit more profit. And the reason why I do that is because if you have it set too close to the price, you'll get wigged out and then you're out of the trade for good. The whole idea of keeping your stop loss far enough away from the price action is to not get wigged out. So that way, if we do break out to the up end, you could take this stop loss and chase it up. You know what I mean? And find where the other support is. Like it's probably right here at 40,150 because we topped out here. So you could think about that in the future. If we do get above 40K again, 40,150 might be a hurdle that we're going to have to jump over. You know what I mean? And that's what trading's all about. Even though we're in this pennant going down, this could still show you where future resistance might show up, guys. And that's all crucial because we don't have much data above 40K. So we take what we can get. You know what I mean? So, I mean, dude, this is, where's 40K? Right here. So look, we have literally like about 16 or 18 candles on the 4 hour above the 40K mark. Even the wicks that I'm talking about, maybe 20. But, altogether, that's not much time above the 40K mark, which means we just don't have much data for that. And you're just going to have to use what you can, guys. Use the edges you can. Anything you can grasp onto. Believe me, other traders see it too. That's how trading works. That's why these pennants work. Because either traders think it's going to break up or break down. In this instance, traders didn't agree with the bullish and sentiment behind it, according to some traders. Some traders were really bullish about this, saying we're going to break up from this. I was a little more hesitant to say that because of past experiences, especially after cresting at an all-time high. I've been expecting a drop. And I don't suspect it's over, guys. I know people keep telling me the bear market's not over. I mean, the bull market's not over. Perhaps not, guys. But I'm playing it safe. Okay, so I've used my stop loss and keep it set. You know what I mean? And now that my stop loss is, or now that we broke down, let's see. My I might keep my stop loss somewhere below this ascending 50 MA on the daily, just in case. I haven't even re-entered a trade yet, but if I were to re-enter, let's say I re-entered on this dip somewhere. I always try to act like I'm perfect. I never catch the wick or the dips like that. I always end up buying back around here, which still leaves me room to get profit. But especially if you buy here and you realize that this resistance or support is now resistance. Once we reach that, it should have been a dead giveaway. Hey, it's time to take some profit, and that's this trend, or I mean, this pattern is what it all circles around, guys. I'm trying to make sure I didn't forget anything. Let me see. Figuring out which way it's going to break out. Okay, I'm going to mention this one more time. It's going to drive you crazy. So just use risk management the best you can, even inside of this. If you're going to go long after this drop right here, keep your stop loss set. Once or that's what I did off of this bounce when I bought a little Bitcoin. I might have my stop loss set here once we crash into that 50 MA. I'm thinking we might break above it. And if we do, I want to keep my stop loss walking up. But if not, we dip through it and my stop loss tripped and I'm out of the trade. And people say, well, Tim, you lost a lot of money right there in that little. You know what? I don't care. That's not what it's all about, that extra 4% or 5%. You know what? I made plenty of money buying. Not I didn't buy the bottom. I bought close to the bottom though, and then buying up to here. My stop loss is what sold for me. And that's how I trade, guys. Is I let my stop loss trigger most of the time. And the reason why I do that is because I think that if it keeps going up, I have the opportunity to move my stop loss up here. And you know what I mean? Here, I'm sorry, I'm grabbing the wrong thing. But let's say it does break through that 50 MA and I walk my stop loss up to here. And let's say it peaks here. I'm going to try to grab some profit if it does reach the peak. But if I'm not paying attention, I know my stop loss is going to save the day. And look, it would have saved me from losing this much profit versus this one. And that is just something you're going to have to get used to, guys, is using a stop loss. All good traders use them. They're a backup parachute. They're just as important as a backup parachute to a skydiver if you want to compare the two professions. But this current pattern right here was 50-50. Now what I'm going to do is I'm going to show you guys another pattern real quick before I bail out. I want to make sure this video software I'm using is actually worthwhile, and if it records long enough. I don't know how long I've been recording yet, but I think it's been over 15 minutes. So I'm going to go back to the last pump we had a couple of years ago and just show you the pattern back there, because it was a very here it is right here. It's hard to see because it looks like it's nothing because we're so far above it right now, but you can always make your screen bigger by, adjusting a few of the settings. So here we go. I'm showing you a different pattern. This one isn't a equilateral triangle like the last one, is it, guys? And I'm also going to. Okay, so you could tell, even though we did wick above it, this triangle stayed in, or the top resistance. That's why I told everybody to keep an eye on the one that we have currently on the chart from the last pattern, because look, this one came into a play, and look, after we did finally break above this forever descending resistance, look, we had a nice run up. You know what I mean? We went from what 60 or 7,500 all the way up to over about 10,500, and that $3,000 pump is a lot back then. You know what I mean? So that shows you that these lines don't just disappear because the pattern is over. You know what I mean? Then you need to keep that in mind. All right, so what am I going to do now? I'm going to draw a line. Look, and I'm drawing it from here for a specific reason, and I'm going to show you guys why. I'm going to try to draw it as straight as I can. All right, I'm going to show you guys another trick. I showed it in the last video, but I haven't made it. I don't know if you guys got to see it or what. Now let me oh, come on. Okay, well, I got to move the line up here. I can do this and I can show you guys, cuz man, I can't see the settings button. There it is. All right, so keep it up there, right? Go to your coordinates. Okay, my coordinates are perfect. Okay, I must have accidentally set it perfect. But if they aren't, let's say this one says 2. All right, so now this line is not flat. Even though it may look like it, it's not. Now my coordinates say this and this. So I'm going to copy this, Control C, and paste it there, Control V. Now press OK. Now that line is completely straight. And I'm going to show you a more dramatic. Okay, so there we go. Now you can tell it's not straight, right? Because it's very crooked. Now you can see that the coordinates are way off now. They're about 1,000 off. So I'm going to press Control C, and I'm going to show you how dramatic it changes. Because it's tricks like this that are going to help you from sitting there trying to make a perfect line. You know what I mean? You can use other tools to do that, but this is also another way. See how it went out straight? Use that to your advantage, guys. You know what I mean? Come down here after that and find. Now you can set the straight line right where you want it. Okay, right there is where I'm going to put it. So we had resistance here, followed by support there, support there, support there. That's how you trade these patterns. Look, this was a beautiful pattern to trade. I mean, if you would have kept the indicators I have on there, you could have made a lot of money, because all of these wicks bounced off the bottom of this cloud. And this is it's very reminiscent of the pattern we were just in. I mean, it wasn't an equal. I know a lot of people had their pattern drawn like this, which is why it kind of threw me off. If this pattern is what I mean. So like they said that this was the triangle, and it resembles what we were in literally 2 days ago. You know what I mean? And either one could work, guys. This is a pattern. That's a bearish pattern, if you ask me. A right triangle is bearish. But this is a 50-50. And we didn't have very many touches in this general area, but we do have one here, we have one there, and we have one there. There's no doubt about it, guys, that this could have been the same. This has just as much clout as this pattern. So one thing you could do is judge it by the result. I mean, either one of them could break out to the bottom, and this has a lot of resemblances to the last pattern we were in, because remember, we were under the cloud and the 50 MA just like we were here, and it failed. You know why? Because being under the cloud and the 50 MA is bearish, along with we peaked out lower high, lower high, lower high. How does that resemble the one we were just in? It exactly resembles the one we were just in. We peaked, lower high, lower high, lower high, broke down. So it's something that we need to take into consideration when you're trading these patterns, the end result. So what do? You set your stop loss and hope for the best, and hopefully you can make some money off of the swings on the inside. To me, it was more profitable to trade the right triangle versus to trade this. And the reason why is because this descending resistance showed you all the hits no matter what triangle you're looking at. But this bottom one right here, you got one potential hit here, another one where we staggered here, another hit, you could call that a hit too, I suppose, if you're smart enough to catch that one. You know what I mean? Because it didn't really hit the bottom support. So it's kind of one of those things where, not everything's perfect in trading. You're just going to have to be fluid and learn how to deal with the ups and downs of Bitcoin, guys. But that's why I told you to keep that last line. And I'm going to show you guys what I'm talking about before I bail out. That last line of the pattern we were talking. Look at that, straight up, man. It looks beautiful. It's so much higher than the where we were just at. In fact, I got to make this chart smaller. I can't deal with this all this bull. All right. So I just wanted to go over one more thing, and that is, let's go back to the 4 hour. Is this pattern right here? A lot of people were telling me, this is a $30,000 uh right triangle, and I even mentioned that in one of my analysis the other day. I'm going to show you guys why people feel that way. Even though we do have some wicks below it, this isn't the final say in anything, guys. This is kind of just a rough estimate, but you can see how this and this will eventually, which means we are technically still in a big right triangle, which means we could break down from this, guys. And which means end of February we may see more dump, and it wouldn't surprise me one bit. Usually after a good long pump like we just experienced, there is some blood in the streets, and we're just gonna have to learning how to identify these patterns early are the trick, and that's what I'm doing right now, guys. Is the earlier you identify it, the more trades you can make off of it. So always use risk tolerance, identify them early, make money, and be happy, guys. And exercise that risk tolerance, that risk management. That is key, guys. Always key. And I'm gonna go ahead and end the video there. I think I've talked enough, but hopefully it worked well on this new recording device or recording app I have. But anyways, if you guys have any questions, leave them in the comments, and I'll get to them ASAP. Thanks, everyone.